Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, gold has hit multiple record highs and gained more than 26% so far this year on central bank buying and as investors seek the safe haven amid the turbulence generated by tariffs. It's recently pulled back from its highs, but Violetta Todorova from Leveraged Shares sees that as temporary.
There are some very strong tailwinds supporting the price of gold, and I think this pullback that we are seeing is going to be temporary. So I would be watching a couple of levels. So first is minor support at around 3,270, which if gets broken can trigger a short-term decline to around $3,100 an ounce, where most probably we will see very good solid support arising. I am of the view that the all-time high of around $3,500 an ounce will be broken in the next month or so, and that could trigger a very sharp rally to around $3,800 and potentially to around $3,900, potentially $4,000 by the end of the year. We are seeing a very strong central bank demand. And I think this demand, especially from China, is going to continue this year, and that should support the price for gold.
Global logistics software solutions firm WiseTech has flagged that potential demand risks from tariffs could pose headwinds for the company this year. Nonetheless, Violetta Todorova from Leveraged Shares looks at the potential upside for the business and the key resistance levels for its shares.
I believe we're not going to see a massive retreatment from here. I'm targeting the resistance of $89, which most probably is going to be cleared very decisively within the next week or so. So that would give us initial price targets of around $103 and over the next couple of months to around $122. So anything around $79-80 presents a great buying opportunity. But if the share price doesn't go there, I'm very happy to buy the breakout. And I believe we won't see a disappointment here. We have a massive gap which we have to see filled. And WiseTech, I believe, is not going to disappoint investors.
Well, let's now examine two of Australia's most traded uranium stocks. Michael Gable from Fairmont Equities is bullish on uranium. First, here's his take on Boss Energy, which is the most heavily shorted uranium stock.
Quite simply, the top chart is the price. It's a weekly chart. The bottom is the RSI, which is a momentum indicator. It's showing a lot of bullish momentum, bullish divergence. So what I mean by that is the momentum indicator at the bottom, that bottomed out in about September last year and has trended higher since then, while the share price has trended lower. So essentially when you see that divergence, it's a very bullish sign, and now Boss Energy is reacting. So in the past, sort of few weeks or so, it's already rallied about 50%. But as you mentioned, it's heavily shorted. Close to 25% of this stock is shorted. So if we've seen the lows, and I think we have, and we've seen the spot price already start to get a bit of a move on, if those shorts start to cover, you're going to see. If you think the move so far has been explosive in the past few weeks, wait till those shorts start covering. So I think that's a big opportunity here with Boss Energy.
And Bannerman, you also think looks like a good buy here?
Yeah, so also in that sector, Bannerman's a smaller company, so in some ways has a lot more leverage to the improvement in that sector. Also showing bullish divergence on the weekly chart. Not as heavily shorted. I think the shorts are up at sort of several percent at the moment. But look, another good buy in that sector if you're looking for one of the businesses which isn't producing yet, so could potentially give you some more leveraged upside.
And that's it for this week's edition of The Charts to Watch. Join us for more technical talk next week. Happy trading.